What is good, Stackers University? So glad to have you here today. I wanted to spend a little time talking about silver and manipulation and or intervention. And so some of you might remember me showing you this before. It's a simple collection of words put together while spaces between them so that you kind of have to figure out what it says. So take a look at this phrase and tell me what you see. I'm willing to bet that about 95% of you saw the three words, help is nowhere. While that is correct, let me give you a helping hand because there's also a four-word phrase that can be seen. Do you see it? The other collection of words that can be made out of those letters is help is now here. I brought this activity back because the better we train and teach our brains to work beyond looking at the surface, the better investors we become. Because we often have to see what isn't there at times, and we have to see the opportunities before there's even ever confirmation. Since I started this channel, we've been talking about and preparing ourselves for this bull market. While other investors were seeing help is nowhere, we've been spending the last 3 years seeing help or the opportunity is now here. And so we spent the last 3 years in particular buying what was clearly the bottom now, but we only know that because of hindsight. And this is a clear example of how investing starts in your head, which then allows you to see opportunities where others see quote unquote metals market going nowhere. Because of that, we were able to buy silver in the $19 range and gold in the 1700s. And fast forward, that same ounce of gold is $900 more, and that silver is 65% higher. What you were able to do was to see that there were current market conditions, but more importantly, anticipate where the market was going, and then having the courage to take action yesterday so that you can reap benefits today. The difference is that the average investor has been sitting around waiting for price confirmation before they decide to invest. And as a result, they lose out on time to build a position and miss what Rick Rule calls the easy money. For those of you that were brave enough to venture into the equities with me, we saw many of our positions cut in half at the very beginning, but you stayed the course and kept adding to those mining stocks at those cheaper prices. And now you're sitting on 100+% gains. And the mining stocks haven't even really gained any momentum yet. Like the letters that I showed you earlier at the beginning of this video, we have to use this as a way to help retrain our mind. The way you see things, the way you frame things, as it has a tremendous impact on what you do. Silver is a perfect example of what you see, the way you see it, the way you frame it has a tremendous impact on what you do and expect from it. Go back 2 weeks ago and think about what you were seeing around silver. All the thumbnails, the comments, the posts on Twitter or X, Reddit forums, all the other places. The sentiment was terrible. And now it's completely changed. The way the sentiment whipsaws back and forth around here is enough to give you whiplash. I talked to a couple of dealers, and what they were telling me is yes, there are people selling because they need the money, but they are also seeing a growing group of people who are selling because they're fed up with silver and or they finally can sell and break even. In fact, one dealer has seen a few people selling their silver in order to buy gold. As crazy as that may sound to you, we can't ignore that within our community, there's a large number of us that are strong hands who will hold on for dear life, no matter what. And at the same time, there are an awful lot of weak hands that thought they were jumping on a rocket ship 3 years ago and were going to GameStop their way into obscene profits. Those people, let's call them the weaker hands, are absolutely contributing to some of the challenges we're seeing in the silver market as investors. We have to see this coming and the impact it will have on future price action. This doesn't mean that silver isn't going to do some significant numbers, but it does mean that the hike is going to take longer. We simply have to admit that the casual silver buyer is very different from the average gold buyer, and that changes how the market behaves. There are a crap ton of people who bought an incredible number of ounces, especially silver eagles, at about $35, only to see the market collapse, and over the last 3 years, just see prices go down and down and down. Those people have spent the last 3 years waiting and watching silver get cheaper and cheaper while they became increasingly frustrated with silver as an investment. That means they're going to be taking profits. And this is all a part of understanding the psychology of markets, how investors behave, and why most people ultimately sell low and buy high. All of this got me to thinking about a TV documentary that started back in 2005. Some of you might remember, it's called Intervention. And Intervention was a serious, intense docu-series that gave viewers this like really raw and unfiltered look into the lives of people that are struggling with addiction. It was heartbreaking and uplifting at the same time because interventions are powerful exercises. For the next few minutes, I want us to have a mini intervention that is truthful and honest about silver. And I need to warn you, like most interventions, this isn't going to feel comfortable. It may even hurt. You may even want to run away. But if we're going to be the best possible investors that we can, we have to tell the truth. And so let's start by talking about performance. Without a doubt, the performance of silver has been disappointing, especially in light of gold reaching all-time highs almost every other day, it seems like. Take a look at this price chart of silver since 1971. What does the chart show you about past performance that you can use for future projections? In fact, I could actually argue that this is the only chart you need to know everything you need to know about silver and what to expect. One, yes, we all see the bullish cup and handle pattern. While there are two spikes here, the price has generally trended upwards since 1971 in a very nice way. So this means no matter what, holding silver is a good idea. Please don't take this as negativity. Next, I want you to notice the spikes, but notice that they are blow-off tops and very short-lived. In fact, here, let's take a closer look at the 2011 spike. It started at $37 and went all the way up to $48 in 27 days or so. But by May 5th, it was already back to $34. Switching from this chart, let's talk about what silver has really tracked over the last 40 years. And I covered this in the previous video because we've all been taught to follow the GSR and that the GSR should serve as our guide when it comes to choosing gold or silver. But what if that ratio is broken as suggested to you in this video or this other video here on the screen? Because over the last 20 years in particular, silver has become more and more tied to copper and almost has moved pretty much identically to copper. I mean, it's like Copper's been singing the song, that ludicrous song, "When I Move, You Move," just like that. All right, never mind. Some of y'all will get that reference and joke later. At any rate, you have to decide what you want to believe, what the pundits talk about or what your lying eyes are showing you, if you get the joke there too. We have to accept that even though we know silver is money, the more it's used in industry, the more it loses some of its, quote, moneyness. Every time someone starts hyperventilating about all the uses of silver, I just shake my head because they don't even realize how their argument actually diminishes their argument about silver's moneyness. I believe this is why more and more silver has tracked copper, a base metal or industrial metal. And it's why I have to argue that in some ways the gold to silver ratio is broken and is no longer reliable. Let's move to the next point before someone starts typing about silver deficits and I lose my mind. You can't tell me there's a structural deficit when investor demand is what's causing the deficit. Why? Because those ounces we hold as investors didn't get used up and they didn't just disappear. They just moved from one place to another. It's like taking $20 out of your right pocket and putting it in your left pocket, only to try to get excited that you just found $20. It was the same 20. Anyway, as we covered, there are more than 5 billion ounces of silver above ground in storage facilities. So yes, we are consuming a large amount of silver, but we're not really in trouble. Next, let's go back to the silver price chart. And I want you to pay attention to the gray vertical bars representing recessions. What does silver do during those gray bars almost every time? It goes down. Here's another chart that shows how much the percentage has changed during those recessions. So if we're headed for a hard landing or a recession, what should you expect silver to do? Have some sort of pullback. And I want to be clear, that doesn't mean you shouldn't be in silver or it's a bad investment, you should get out of it. What it does mean is that as an investor, you have to expect that and not allow it to shake your confidence or to cause you to start selling. I need you to anticipate this and view it as typical market behavior. Otherwise, the traders and the big money will use it as a way to get you to sell your position at the wrong time. Next, we have to examine the relationship between the dollar and gold and silver. As this first chart shows, the correlation between gold and the dollar is very weak at best. But when it comes to silver, you can see that there is a little bit more of a correlation, but it just happens to be inverse. Meaning, the lower the dollar goes, the higher silver goes. This means silver needs a weak dollar environment to excel. This also means that you should expect that there will be times when the gold will be up while the dollar is strong and silver will be showing weakness in price. Instead of getting frustrated and using this as the same old tired excuse for market manipulation, you need to understand why it's happening and take advantage of it. For example, if the dollar has a little mini rally and silver is weak as a result and gold continues to go up, that is likely a buying opportunity as opposed to just sitting it out and seeing what happens and missing an opportunity. Next, let's talk about performance. It's just a matter of fact that silver's performance is not the same as gold. As you can see in this chart, the returns are completely different. And I like to think of it as like you trade some of your upside in silver for the lower entrance price. And so you just have to accept that. That aside, we know in a bull market, silver will outperform gold, in particular towards the end. And as you can see in this price chart, it often comes right back down, which means that you have to, and I mean you have to be willing to sell in order to realize the profit and capture that upside. If silver goes from $50 to 100 in a month and comes right back down to 60 and you didn't sell, instead of capturing a 100% gain, you're stuck with a 20% gain. Now, 20% is nothing to spit at, so don't get me wrong, but you didn't go through all of this on all the gyrations of the silver market to miss out on that 80%. Now, let's end with expectations. And I don't know if I've ever seen a market with more outrageous price expectations based off of potential. But remember, as my football coach used to say to me, potential is a French word for you ain't done crap yet. So, how about we let silver break its all time high of around $50 before we start worrying about $300 silver? Is $300 silver possible? I have no idea. I mean, eventually, someday, but I do know one thing for certain. It has to go through 50 and it has to go through 100 before it reaches 300. While I'm all about setting high expectations, especially when it comes to my life, the main difference between expectations and projections is that the expectations are beliefs about what will happen, while projections are estimates of what might happen based on what is currently in place or current environment. This means when you see those high price projections, you have to consider what is currently happening and what would need to happen in the future in order for that to become true. For example, I could make an argument that at $2,700 gold, if gold didn't go up a single dollar, silver should be $337 an ounce. Doesn't that sound wonderful? Of course it does. Until I tell you that that means the gold to silver ratio would have to be 8-1. As I just said, when you hear a projection, you have to consider what conditions would be needed or need to exist to make that a reality. As we wrap up, none of what I shared means that silver is any less of a solid investment. The goal here is to help you train your brain to not just see the current market conditions, but anticipate where the market is going and what you can reasonably expect. Like the letters I showed you at the beginning of this video, you have to retrain your mind, the way you see things, the way you frame things, as it has a tremendous impact on what you do and can expect. In the comment section, which of the expectations stood out to you the most, good or bad? What are your expectations for silver as an investment? Or simply put an A+ in the comments so everyone knows that you always stack smarter and never stop learning.